What's going on, guys? This is Giunta with Team Take Profits. I'm here to help you trade and get paid. In today's video, we're going to give you an inside look at a live trade session where I led my team into some major profits. We were looking at GBP AUD, which is really the only pair I trade, but we were looking at GA and we caught some major profits, some major pips on this trade. And I'm going to give you a look in live real time, not in back testing, but in live real time, exactly what we were looking at. It's going to be real beneficial so you can see the charts kind of through my eyes and kind of see how we look at things together as a team. Don't forget to like, comment, and subscribe. Click the bell so you get notifications. Check out the website, tradinggetpaid.com. I'll see you on the charts. Let's get it. As far as GA, let me just say this. We saw this big candle here, right? So let me just put everybody saw this and everybody freaked out, right? Everybody was like, oh, some people called it the breakout. Some people then saw the wick and said, you know, I caught these pips. Don't let me be the bearer of bad news here, but you didn't catch anything. You got lucky. If you made money off of that, you got lucky. That wasn't a real trade. We're gonna look at what's really going on in the market right now. So, first things first, I believe that when you're looking at the market, you can't just look at what's right in front of you, right? You can't just take a look at this right here and say, you know, hey, we got us a wedge pattern, and you know, we had a nice little move up, or it's, you know, if I look at this right here, just in and of itself, all I'm seeing some bearish movement. I got to look at more than that. I can't just say this is some bearish movement and I trade based on that, especially when you're swing trading. I got to look at the overall picture of what's happening here. What I personally do is I go out to the weekly chart, and I've showed my team this every single class for probably the last months and months and months. But when you zoom out, this is what's really going on in the market right now. So if you look at this right here, you have this upward swinging channel that has been moving, and I'm going to actually get rid of this text. But you have this upward, you see them little green arrows that I showed you guys? That's nothing. That's like this tiny little piece of the market that's going on. What's really happening is we've had an upward swinging channel for over 3 years now. In 2016, in October, we hit a low, and we've been steadily climbing ever since, and that's been over 3 years now. Right now, no matter what little bit of bearish movement we're seeing in the market right now, this is a bullish trend that we are in on GA, and we've been in that way, and this is the weekly chart. So this is big moves here. This is like a long time. For 3 years, we've been climbing up this channel, and if we're going to know what's happening on the smaller time frame, then we need to know what's happening on the larger time frame, because nothing happens on the smaller time frames that isn't being affected overall by the larger time frame. What we see right here is this channel has been tested over and over again, you know, and you see it riding back and forth between this channel. When you split this channel, you have the overall trend is a bullish trend. But then within every trend, and you should know this if you know, I'm not going to go into beginner class tonight, but if you understand trends and if you understand wave theory, then you understand that every wave has a wave within it, right? So you have your A, B, C, D, right? You have all of your waves that come within the wave. And it's the same thing with your quarter points. Every quarter point, your major 1,000 pip zone has 100 pip zones within it and 250 pip zones within it. And so everything comes down to wave theory and price action, supply and demand, all that. If I understand that I'm in an overall bullish trend and an upward swinging channel on GA on the weekly, but the most recent move I see, because even if this is an upward trend, this right here is a down move, right? Or this right here is a down move, like a high, low, lower high, lower low, right? So this is a lower, or this is what we call a counter trend, right? So you could drop a line on that and call it a CTL or a counter trend line. in this particular case, what's going on right now, the most recent move in the market has been since this reversal down here when it came down and touched the bottom of our channel back in July, and it's been rising ever since, trying to get to the top of the channel. And so because of that, you have the most recent move in the market is this bullish trend right here, okay? And so what we do is we mark out what we have currently, and just like what we do any other time, we do a trend line cutoff, right? So anytime we see the breakout, then we trade it, right? We trade the breakout on a trend line. But all right, guys, I want to take a little pause right here, and I want to give a quick shout out to Jay Wayne. Some of you know him as Jay Take Profits. He was actually on that trade session with us, and you know, as part of the team, he helped us to catch some pips. Team Take Profits, you know, we say it all the time. We don't compete, we dominate. The whole team eats together. Well, Jay is part of that team, and I want you to check out his video on trend lines above. This video will change the way you trade, and I'm telling you, go subscribe to his channel. He's one of my guys, one of my partners, and we catch pips together. Let's get back to these charts. When we understand something, that every line we make on the chart has to make sense. So when we look at the weekly chart here, let's scroll. Let me zoom out a little bit again. Using quarters theory and using supply and demand zones, we can understand. I mark these lines. These are my zones that I trade on GA: extreme high, extreme low, slowdown zone, a low slowdown, lower middle, higher middle, high, and extreme high. And I know that in between those zones, these are your major quarter points and your major levels of support and resistance, or supply and demand. Now, there are minor levels in between there. Like, for an example, at this level right here, we see a minor level of support and resistance. But this is the major zones right here. I marked these on my chart, like, I don't know, almost 2 years ago or something, a year and a half ago, and I haven't moved them since. These lines have been on my chart, and this is the lines I trade over and over again. When I get a breakout of a zone, if I'm inside of the lower middle slowdown zone, then I'm not looking for a trade inside of that. I'm looking to trade coming out of my zone, right? So for an example, if I'm inside of this zone, I don't trade inside of here. I wait for the breakout and I trade it all the way up to here, because I know that's the next level that's going to stop me. And so when you look at something like that, you know, just from here to here, you know, you're looking at 650 pips. You know, you're talking about some major pips there. So when we look at understanding these major zones, and we have these zones marked out, we understand supply and demand, then we start to see harmonic patterns, and we start to see what's going on. Like, for an example, we see this channel. Then what we do is we have this most recent trend. And so we start with the largest picture. And then what we do is we try to capture price down into the smallest area where we can, so we can find the most immediate breakout. For me to try to trade this, let me show you the measuring tool. From here, like all the way up here, that's 5,000 pips, right? I can't look for something within and narrow it down to 5,000 pips. That's too much. That's too wide. So I try to narrow it down even further. And so what I do is I come back down into here on my weekly chart. And when we're down in here, now, because I have this, I have my lines, my horizontal lines that I are always going to be there. They're never going to leave. These lines are always going to be there because those same zones have been tried and true for years, right? You can go back all the way 20 years or something on the chart, and you can see that those same lines have been tested over and over and over and over again. And because I can trust those lines, they're tried and true. Well, because of that, then I can leave them locked in, okay? Now, when I do my movable lines or my temporal lines, I like this trend line, for an example. This is the most recent move. Now, guess what happens? When price was in here, for an example, I had this little triangle, just this little triangle. Now, I basically took all of this, the whole chart, and I narrowed it down to this little triangle. And I said, it's got to break out either below my trend line or into my zone. One of the two has to happen. And, of course, we saw that it broke and came all the way up to the top of the next zone, right? So it literally came out, and then now we had this correction, and this was a bunch of news last week in the market. So with all that being said, what we've done is we've essentially took price and captured it within a small zone, and then we wait for the breakout on those zones. So because we know on the weekly chart that we are resisting essentially, now again, let's look at where we are. Right now we are resisting entering back into a slowdown zone. So that's why you're seeing all this crazy movement in the market right now, because right now price is trying to decide, do I come back into the zone and fight with my trend line, or do I reject this zone where there's convergence with the current trend line and push back up to the top? Price is trying to decide which one it does, and it's always going to take the path of least resistance, right? And so now that we understand what's going on in a weekly chart, what we do is we don't trade the weekly. We use that understanding of what's going on as we zoom out to bring it back to what we're doing here. So now on the weekly chart, we saw one big red candle that came back down here. But when we bring that down to the 4-hour, we understand that there's a lot of movement that goes on in there, and there was a lot of bank manipulation. So then it came here, it pushed back up, causing my first, my lower low essentially, my lower high, I mean, and then essentially causing my flag right here. So once I get my second confirmation, I get my high, my lower high, I can drop my trend line. So it's 1, 2, go on through, okay? So as soon as I have a confirmation of a lower high, as soon as I have a confirmation of a lower high, then I can draw my trend line and go right on through. Now that trend line was been there since this wick right here. And of course the price has respected that the whole time. And then here's what's really interesting. When you look at it up close, usually we would see where you know, a low, a high, a low, a lower high, and a lower low, and a lower high and a lower low, but you're essentially seeing an even bottom because it's respecting this major zone. It doesn't have the power. There's not enough selling power to push through this major zone, and so we're essentially just walking the floor here. We're walking the bottom of our the top of our zone, and it's becoming a floor to our pattern. And because we have this, essentially, eventually, price has got to break out of here somewhere. And because we see this falling wedge, we generally believe on a falling wedge that price is going to push up. Out of a falling wedge, we always look for bearish move or bullish movement. We in a falling wedge pattern, the bulls generally win that that fight. However, there's something to look at here. Where does your falling wedge come from? Okay, let me show you something. All right, so if a falling wedge, if a wedge comes from, so let's say we're looking at this, right? And this is sloppy, but it is what it is. If we're looking at a wedge, right? And let's say, for an example, that wedge comes from here, which is generally the case. That is generally where a falling wedge comes from, because it is a continuation pattern of the bullish movement or the bullish market. Then that's a no-brainer. We know we wait for the breakout, and as soon as we see the breakout, we trade it, right? Because we know that we are already in a bullish market, and when we see the breakout, we're in. So essentially, we don't even really, like, not to say we shouldn't wait for a retest, but as soon as we see candles closing outside, we're in, because we already have a lot of confirmation of bullish market, and so we catch it right out of the breakout, just like you would a trend line, and you take it, okay? However, that is not the case in this particular move. This particular wedge has come from a bearish move, which that's different. We still are looking at a falling wedge that trades as a bull market. So we're waiting for that push out like that, which is why I got the arrows on the chart. However, because we're coming from a bear market, then we know we do still have selling pressure. We still do have some sale pressure coming into the market. Not enough to break through our major zone, but enough to where we still have to respect this pressure that's over here. Okay? We still have to look at it and respect it. Now, whether it will win or not, that's another story, but we still have to at least consider it. Okay? So in this particular scenario, because this comes from a bear market, and now you can trade however you want. I won't trade the breakout. Okay? Unless it's like a major breakout, like, crazy, like a super big breakout, I won't trade it. I want to make sure that I have confirmation of a bull market. So I'm going to trade the retest in this particular case because of the selling pressure that's in the market. Again, if this was coming from here, I'd trade the breakout. But because it's coming from here, I trade the retest. I hope that makes sense. Type 1 if that makes sense to you so far. Okay? So because we have bear pressure, we don't trade the retest or the breakout, we trade the retest. Okay? Now, here's the next thing. Let me show you this real quick. And I'm going to try to get you guys off of here in the next couple of minutes because Tom has class for beginners. Okay? This candle right here, let me explain to you what happened in this candle. I'm going to follow the comments on my phone. Give me a second here.
This guy just went crazy. He pulled it all the way back to the weekly and the monthly,
all one.
showing.
He said retest is the trend. Yeah. So essentially, that's what happens is a retest here, right? Let's I would just use the ABCD thing. So,
never seen this.
If you look at this right here, let's just say it does break out.
Back.
Doesn't that become a trend? You know what I mean? That becomes your new higher high and your higher high, right? So, so essentially, that's what happens is we're having a trend reversal. He said the breakout is expansion sometimes. Absolutely. All right, cool. Yeah, are you using the 4 hour to retest? Yes. The breakout is expansion sometimes. Yes. May you please mute everyone? Yes. All right. So what we saw here was this. Number one, if you look at Forex Factory, you saw that we had some news about 20 minutes after this candle came. And what you saw here, this is very interesting because we have this bear movement and then we have this falling wedge. But then this happened. We're waiting for a breakout, right? So essentially what we're waiting on is this to happen, right? That's what we're waiting on. However, what happens is we see this massive push up like this, and then this wick comes all the way back down, right? What was really going on there for the entry? Do you use 4 hour time? Yes, I do use the 4 hour time frame. What do you consider a super large breakout? I'll explain that in a minute. Well, let me say, just so I don't forget, a super large breakout, in my opinion, would be where it eclipses where immediately in one move eclipses the previous high. So if it were to come up and close like up here where it eclipses the previous high, then I would say, on that close, I'd be willing to trade that. You're going to end up getting a little pullback and then going up, and I'd be looking to trade in that zone. So I hope that answers that question. Anything that creates a new level, that's what I would call an extreme move. So what we've seen here though is we've seen manipulation. Okay, I teach my class about this all the time because it happens so frequently in the market. So I'll get to that question in a minute. What's the preferred entry? When we saw this push up like here and it stopped here and then it pulled back, the candle pushed back. What that was, let me tell you exactly what happened there. All of this selling pressure from here is still in the market, as I've explained, correct? So everybody understands there's still selling pressure in the market. And a push up, selling pressure. Push up, selling pressure. And if you notice, now obviously this is pretty common sense, but just to still make sure, every time we go up, that selling pressure gets smaller and smaller. Do you see that? You see how that, you know, that sell, obviously because it's coming down into a flag, is going to get smaller and smaller, which means that you're going to have a smaller and smaller sell pressure in every time it pulls back. What happened there was that we saw enough sell pressure here that the bulls in the market decided we're coming really close to a breakout. We don't have much room left in this wedge. Tonight is London. A lot of money is going to be moving in the market. So here's what that candle was. I'm going to tell you exactly what it was. This move was the bulls saying, let's test and see how much sell pressure was left in the market, because they still know that this is there. So they said, watch this. We're going to push this up, and then we're going to let go of it. We're going to push it up, and then we're just going to let go. And then let's see what the bulls can, or the bears can do. So essentially, if we look at this in measurement-wise, let me stop my annotation. If we look at this measurement-wise, the bulls pulled this up 90 pips. And then the bears pulled it back down to 30 pips. So essentially, the bulls pushed 90 pips into the market. And then the bears said, let me push back. And they pushed 60 pips. So essentially, we have a 30% strength in the bullish market. That's how we understand currency strength analysis. And so we have a 33% strength in the bull market over the bear market. And because of that, if we know that we have 30% more strength in the bull market, then we can essentially take this and say that was their test. The bulls pushed, the bears pushed back, and the bulls won. Okay? The bulls ended up with 30% more strength than the bears did. So now what we understand is there was a 60% correction. I call these market aberrations. In other words, this movement right here from the top of that wick to where that correction happened, you have this market manipulation, then you have correction. So essentially, we push it up 90 pips. That's not normal. That was abnormal movement in the market. Then the correction came and brought it back to normal. That's what correction means, right? So when you correct something, it means you bring it back to its proper place, so you make it right. And so this 90 pip move was not real. The 60 pip correction showed us what was real. So essentially, the real move was 30 pips. Okay? So you could essentially cancel that wick out and then say this. Watch this. Because I know I had 60 pips of correction, but 30 pips of movement, I can go like this. From the top of my real movement, I can measure 30 pips. Okay? Right there. See where I'm at? 192,838. Okay? So I can literally drop a line right there. And here's what I know is going to happen. Now here, because of that, I can take the move that I'm anticipating, I can push it up to that 30 pip line, do my pullback, and push it up, right? And now, because of that, I'm literally showing you where that's going to happen. Now, watch what happens tonight in London. You're going to see where the market is going to push up to that 192,850 area. It's going to pull back, and then that's where we're going to be looking for takeoff. Okay, so when you see price enter into that 192,850 area, wait for the pullback in that from there, and then you're going to enter off the top of the trend line. Okay, now literally all we had to do was let the bears show their hand. The bulls pushed it up, the bears pushed it back, and then that told us how much strength was left in the market. And so because of that, that tells us we have 30 pips from the real move, and we're going to end up pushing up to the 192.850. We're going to pull back, and then depending on that pullback, that is where we're going to see what really happens. If let me get the annotation back out. If this pushes up to the 850 and we have a deep pullback, let's say we have a real deep pullback, like a all the way back to the 32 line or something, we could essentially see something like this where it comes back into our pattern again. And essentially, how many times have we seen where it pokes itself out of a trend line and then just comes back in, right? So that's why I'm telling you, because of the bearish pressure in the market, we don't want to trade the breakout. We want to trade the retest. If it comes out and then pushes back and the retest ends up on top of my trend line, it's time to get into a bullish trade. Long, go long. If it pulls back and pulls back deep back into my trend line, then we're going to be looking at something like this. Okay? So we need to be patient and see what that pullback does. We're going to see the extension, the correction, and then the rest. And depending on how deep that correction is, that's going to tell us everything we need to know. It's either going to be like that, or it's going to be like that. One of the two. But that is the only two options. We've literally taken the entire market and we've brought it down into two possibilities. All right? And now, watch this. Notice that line of correction, the 30 pips from normal. Look at it on the level. Look at how much structure you have on that level. That level is not even there until you understand, when you look back, all of that structure is at the real level, because all of that wick was aberration. It wasn't real. Okay? Are you waiting for a 4-hour retest candle to close? Are you entering while the 4-hour retest candle is still alive? So what I will do is I will wait for the breakout candle to close, and I'm going to wait for the pullback. Now, if it comes back to my line and starts wicking off of my line, I'm getting in. Okay? And if that's the case, then I would go down to the 30-minute and kind of see and maybe find a close on the 30-minute, right? But if it closes on the line and it just kind of dies on my trend line, then I'm going to wait for the new candle to open on the 4-hour. So I hope that makes sense. Where would the TP be on the bullish move off the retest? Your TP is going to be at your next level. Always look left, right? I'm sure you guys have learned that. So if we break out here, we're going to have a take profit 1, take profit 2, take profit 3, right? And so if we look at that, right, just bringing out the measuring tool here. If we come off of the retest and we go take profit 1, 70, take profit 2, 125, take profit 3, 167. And of course, after that, there's nothing in the way all the way up until this structure here, which is at 230. So at that point, you should be having partial positions closed, and you should just be riding a trailing stop loss. All right, guys, so there you have it. You see exactly what it is we did to catch some major pips on the chart. Kind of you even heard some questions and answers in the video. This was raw. This was not like an edited type thing. This was just me allowing you inside of our private session to kind of get that inside look. So I hope this really benefited you. I hope that you're able to see by looking at the charts the way we look at them, and kind of analyzing and understanding the positions and the pullbacks and everything. I hope this will help you to catch some profits on your next trades. So don't be afraid to ask questions. What I want you to do is I want you to comment below and check and let me know how this benefited you, or whatever questions that you may have that I can help you with your live analysis. Okay, that's the goal here. Is I want to help you with your chart analysis so you can catch major pips as well. I want to see you in profit. Okay, I'm getting a lot of testimonies. I'm getting a lot of people on the comment section and even private messaging me, social media, whatever, that are letting me know that the videos and the strategies are helping them make money, and I want to see you do that too. So make sure you comment below. As always, don't forget, like, comment, subscribe, and I'll see you on the next video.